Here at Lundin's Capital, we've spent over a decade building a strong track record with our full suite of services and high-performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step and stay tuned to learn more. Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundin's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. An exciting way to open September. What's been keeping us busy this week?
Yeah, hi Mel. A lot of things, but today is busy. Yeah, just 2 hours ago, we announced that we are open for more capital, as we're actually starting our fundraising, inviting investors to invest into Lundgren's Capital, become shareholder. We already have 36 shareholders and are expanding. It's a big step this time, bigger amount. It's the third time we are asking for money, and the target is to be listed on a growth exchange in November 2027, so an IPO. And we hope that people they want to join the journey. So yeah, it's an exciting day always when we announce it, and people have reacted already, so it's fine. We're happy. Yeah. So that's our own shop in the big financial market, but and we're trying to get a bigger part of the pie. Yeah. But anyway, people can visit our websites or everything. We a lot of information about it. So exciting. What do we say today?
Yes, so actually, we have a lot on our plate today, Peter. On top of our preparations for this fundraising cycle, we, as usual, are keeping our eyes out for the biggest or most interesting developments in the global markets. For this episode, we have a few in store. So, first, we look at Southeast Asia, several incidents of political unrest that's been triggering market jitters across the region. We've seen that in the past few days, and we'll look at how markets are reacting. Then we look to China and India, which is forming a rather revitalized and closer friendship at a time when they're going against Trump and the US. The highlight there is this very grand military parade just very recently in Beijing. And then we cross over and look to France, counting down the days to the confidence vote, which is going to be crucial for the future of the economy. And then also countdown to the Fed's upcoming meeting mid-September. And we look at latest data, economic data that we have to check what's the pulse, the expectations from the Fed. So I'll get it started, Peter. So here in Southeast Asia, several economies are under pressure with heightened uncertainty due to political unrest. It's mostly a reaction to a mix of mostly governance issues, but also in the context of higher cost of living. The biggest one is Indonesia. So there are street protests that have been turning into or seeing some violent incidents between police and protesters, and it's mostly in reaction to um very generous housing benefits that's being given to lawmakers, and of course that's being footed using public or taxpayer money. And it has escalated over the past few days. Protesters have been looting the homes of parliament members. Government offices are being burnt because people are basically taking things on their own hands. And yeah, it is a test of Prabowo Subianto's presidency. He used to be highly popular when he got in, but we can't say the same right now. And the markets are definitely feeling the pinch. The stock market, for example, is down for the past couple of days, the currency is also depreciating even against a weaker dollar. Crossing over to Thailand, there's also an issue now that they don't have a prime minister because of a an ouster from the constitutional court. The Philippines also were facing some alleged corruption in flood control, flood management. So that is also triggering some unrest over here. There is a similar issue in Malaysia, and really, it is tainting the otherwise rosy attraction of investors towards this part of the world, Peter, because public frustration is piling up. And as at the time when inflation is high, so cost of living is a bit higher, and you see that there is some question about improper spending of public funds, it's an issue. And yeah, if this goes on, if it could add more nervousness towards this region, and it could be crucial because there is increased attention or attractiveness to invest here at the time, especially when investors are pulling their money out of the US. So it is something worth watching, and um, a different side of the story is that there are protests in the Europe, for example, or dissatisfaction because debt is high, and here you see that spending is also improper. So it's the it's two sides of the same coin, Peter.
Yeah, yeah. As Indonesia certainly is on our radar screen. It's no news. We have sort of had the discussion about
Mhm.
Indonesia several times lately, and there's still what we call sort of bit in the negative sort of development. And absolute, it is the president is not getting things under control. On the contrary, as we see,
Yes.
it's going the wrong direction. How much in danger is the sort of private consumption? As I fully understand that cost of living as such is a pressure, yeah, is
Mm-hmm.
going up. But if we sort of say private consumption, as are people stopping up, getting nervous, or do they actually say, okay, I continue to consume. I'm unhappy, but I consume. What
I
happens?
think it's of varying degrees across the countries I mentioned, Peter. But in a place like Indonesia, where street protests are turning violent, maybe consumption would be limited to the home. If you're near like protest centers, but otherwise it will continue to people will continue to spend at it. Although if the the protests continue for a prolonged period, there we could really see a potential slowdown in household spending, Peter.
Yeah, this is one of our concerns because we build a lot on sort of the global outlook on a pretty stable and healthy private consumption across the world. Now, just because one country tilts, it won't change the picture, but this is not sort of that private consumption is going forward other places in the world right now. Yeah, on the contrary. Okay, yeah, we are observant. Let's put it this way.
It's in a couple of days, Peter. If it does become prolonged, it could be a bigger problem,
Mm,
markets wise. But yes, we'll
mm,
keep tabs on that. Let's look towards neighboring India and China. China
yeah,
put on a spectacular show in Beijing when it hosted a very, very grand military parade. But apart from that spectacle, there is also a quite interesting scene of Indian Prime Minister Modi bonding, really literally holding the hands of Russian President Putin and Xi Jinping together at, attending those events. And that has, I think, triggered Trump a bit because Trump is now claiming, after imposing the 50% tariff on Indian goods last week, now he's saying that India is now ready to waive tariffs on US goods, if only to bring down that 50% duty. But it doesn't seem so. It doesn't seem like India is trying to cozy up to Trump, because instead he's going towards Xi and Putin, which is really the reason why they're under fire against the regarding
Mm.
Trump's tariffs. So I don't think one is not one of them is not really being honest at that point. If you see the optics of it, Peter, it's
Mm.
more likely that India is cementing its ties closer to China and Russia, maybe a posturing of sorts as an alternative set of powers against the US. That's what it looked like. That's how it looked like to me when they went all together in Beijing, Peter.
Yeah, it has been clear and obvious for each and everybody who have just seen like 2 or 3 or 4 minutes of any news from Beijing the past days. China is showing muscle mass. That is simply what they are doing. They are showing current strengths, but they are also giving us a taste of the future.
Mm-hmm.
But we should not sort of try to convince ourselves that it is some as a the Chinese muscle mass is somewhere in the future. It is now, and it has
Yes.
been on the way for so many years. Also, the lesson about China is, and I've repeated it for 20 years because it is several hundred years lesson that economic power today is political power tomorrow. It has
Mm-hmm.
been so for hundreds and hundreds of years, and it's just sort of proving itself again. But this time it has been so obvious, it has been showcased. Uh,
Yes.
a lot of when I look into the media, a lot of journalists have sort of maybe discovered this. But I would say it took off last year at the sort
Mm-hmm.
of the same session hosted by Putin. Uh, then we saw China and India shake hands as a Moody and see last year. And that is for me the start of this mutual understanding of finding together.
Mm-hmm.
Because it is obvious. We don't need to say it. Both Xi and Moody they know if these two countries come a bit closer together, they do represent 3 billion people. It can be that India is a big country, but it's not economic superpower. China is, and this will just fuel the power. But at some time, also simply size in like population means a lot. And it's just to add on, let's say Indonesia. Now we just talked about Indonesia. Yeah? Countries with very big populations, all of a sudden it counts. Yeah? This is what we are seeing. And this time it was just it was more obvious. It was so clear. But it started last year. But it's a long process, and we should understand that there's a deep dispute between China and India since many years. They do not really work very well together. There's no direct flights between these two countries. So if people that want sort of just sort of things to watch out for, if that all of a sudden should come up on the table that they should start to establish direct flights, then it is a clear political signal, and that is so it is so easy to see. Yeah? So if people say okay they don't want to read tens of articles per day, these kind of things are interesting. And then it was interesting today. The Chinese stock market actually pointed into the red and had the biggest loss for 5 months. I would say it was between 1 and let's say 2.5%, depending on which exchange we're looking at. So in Chinese terms, a swing of let's say 2%, it is nothing. Yeah, it's just a quiet day. But so I wouldn't put too much attention to it. But on the other side, some have speculated it is past this political showcase of the power, and some investors have actually got a bit nervous because again we're talking about how the world is looking right now and shaping. Yeah. I wouldn't put too much attention to it. As it has been a good run since April in the stock market. Anything could have sent it 2% lower. Anyway, but it's worth to notice. This is heavy politics touching our financial markets, and normally investors, financial markets, they don't want to involve too much in politics. We like to have it. We live together, but side by side, politics and the finance. but this is a bit too influential. Yeah, we need to take it on the table. So interesting, mega interesting. If we look into France,
That's
it's
politics as well, right?
yeah, there is absolutely no direct link to what has been going on in Beijing and what is going on in France right now. As what we are, of course, looking at is what we mentioned also in the past podcasts. It is so extreme interesting on Monday here, the 8th of September, Monday evening, European time. There
Mm-hmm.
is the confidence vote about the French government. Nobody knows how it ends up. So if you ask the socialists today, and they will not support the government, and then it means it falls. But there's a lot of attempts to find a sort of an agreement with some budget costs cutting, and but not a lot. So everybody can tell the voters they did a good job. France will not go bankrupt
Mm-hmm.
uh, in,
Mm-hmm.
in 5 years, but now it will take another 8 years or something. So this is, but the government is against the wall. Yeah, France is against the wall. If they fall, maybe IMF is coming in, and it is a disaster. It is a political disaster. What's going on in Europe, and nobody cares in the world. As nobody really cares, and that is what it has converted into. It is so heavy to look at the showcasing in Beijing, the Muscle Mars, and
Mm-hmm.
then we are seeing here French government again falling apart, and it is obvious they are overspending so much money every year. There is only hard cuts that helps them, and we have a German government that is not able to take even the smallest decisions, despite it's a young government, just not even a year old, and the Chancellor Merz he has not control over his own basically his own team, as he is from his own party, that is now and then voting against him. So this is Europe in a nutshell. It's nothing new from our side, but it is just to see these two contrasts that is heavy. And should it scare investors? It already does. Yes. So and that was good reason. But still interesting, and Monday will be fantastic interesting, at least for Europe.
The thing about Europe, Peter, is that whichever way it goes, the problem remains the same. That they need to cut the cut the spending or reduce the
Mm.
debt
Yes.
just so it could be more sustainable. And it
Yeah.
will be the same blatant solution whoever gets in power, right? But it doesn't seem like they're getting it.
No. And well, this is what we are arguing here at Long Greens. If you listen to all the politicians and whatever, and I can tell you can find truckloads of people who will argue completely different. But this is not a political debate. This is actually why we see Europe as uninteresting for investments in general. Yeah, so we don't see Southern Europe as investable at all. And even to talk about Germany coming in the same situation is one of the biggest economies in the world. It's the biggest economy in Europe. It's a disaster. So this is how we talk about here, Mel, and also to the audience. It is what we use in our investment decisions, our advisory of wealth people, of how we think about our funds. So what we talk about here is not just something for fun. It is actually exactly the same thinking we have when we consider what to do. So it is actually pretty serious, yeah. Yeah, that's Europe, and to make it pretty easy to try to estimate how big is the problem, because it has been standstill for 20 years,
Mhm.
no reforms. I would argue that the reform that is needed would equalize 25% of the budget. 25% of the whole budget in Germany or in France, wherever, will need to be either cut away or reorganized. This is the kind of reforms that we're talking about, and that is huge. As that is
Yeah,
huge. Normally, huge reforms are like 1 or 2%, because they don't dare
right.
to take the right decisions here. So we are talking about extreme changes that are
Mm.
needed. But this is our opinion. This is how we view the opportunities and the economies. Anyway, should we jump, Mel, to next up?
Yes, let's jump to the US this time. So another much awaited event this September would of course be the upcoming Federal Reserve meeting. So we have talked about it in previous episodes where we now argue for a big time rate cut. Although most market players are looking at more modest 25 basis points, we do say 50 basis points. And we did say last time that between now and September 17, there are key data points that are coming out. And one telling detail from yesterday is the jobs hiring data from the
Mhm.
US, and it is weak. It is pointing to or adding to signs of a very tight labor market right now.
Yeah, and basically a part of our argumentation is also again if we look at to say the job openings is it dropped more than expected, but it's
Yes.
also the steepness of also the speed of the move. So it is moving pretty fast for the time being as a in the in the downwards direction. Both when we talk about the classical labor market data, but also things like, as you mentioned, the job openings. Yeah. So this is why we argue that a jumbo cut, 50 basis
Mhm.
points, is is basically the right thing to do for Fed to be ahead of the curve. But rightly, most argue 25 basis points because it's typically what Fed is sort of doing. But what has happened over the past 14 days is that the market is now anticipating more rate cut again. Now we're talking about five, and that was earlier maybe just two or three.
Mhm.
We're pretty clear in what we mean. Of course, tomorrow, Friday, the biggest, heaviest data of all this is the labor market data. Yeah, it's the unemployment rate. Mel, we will be so excited when it comes out in the New York morning.
Mhm.
And that is, it could be decisive for how Fed
A
is thinking.
large.
Yeah, and we actually gained a friend this week from Fed, a Fed governor, Chris Waller, and he's right now, as a full name is Christopher, but Chris Waller. He was out saying that if the data is weak enough, then he was open towards talking about a jumbo cut.
Yes.
And that's the first time we hear that from Fed. So that is interesting. So we gained one friend.
He did say he did want a 25 basis point cut last July. So that would
Yeah,
be pretty much in line with what we said that there should have been a 25 last time and then another 25 now, making for a
yeah,
bigger cut than expected by the rest of the market, Peter.
exactly. Anyway, it will be fantastic, and it was just to revisit, but it will also, as we've talked about, have an importance for asset pricing in general. So good. That was the US.
Yes. So, Peter, we did actually touch upon the key regions that we cover. Let's wrap it up with our usual weekly global outlook. Given these topics, these developments that we talked about, do we remain upbeat? We say that, of course, sunshine in the outlook prevails. These political unrest incidents in Southeast Asia or in Asia and the debt issues hounding Europe are additional clouds to the horizon, but we still do see some strength as far as global markets are concerned, Peter.
Yeah, I agree. For a few more clouds adding on the horizon in the conversation today. But we have also got sort of a political insight about who is big and who's weak. Yeah, but that just means that the world is changing, and we should
Mm-hmm.
never be afraid of a changing world. We should always see the opportunities. And that is also why we say, okay, we remain overweighted risk because there are enough opportunities out there. And we still see sort of, as we talked about, sort of private consumption across the world and all this stuff is there. So we're still happy with overweight risk. Yeah.
Thanks, Peter. That's all we have for this episode. Already our 49th for Sound Economy. So,
Yeah.
more exciting news coming up for the rest of September. And of course, an eventful week for our fundraising exercise, Peter. So, we thank our listeners and our subscribers for tuning in. And thanks, Peter, for sharing your views. We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinscapital.com.